Hello everyone, welcome to Xylostar, new weekly market update with Mr. Amedian, Mr. Summer and Ms. Norhan.
With the geopolitical tension escalating in Asian countries between India and Pakistan, we see financial markets going into a whole big cocktail. So we'll dive into this in a second.
Finally, we got a deal between the US and UK about the tariffs, and Donald Trump mentioned on his social platform that there's a queue of countries who are open for negotiation about the tariffs.
Hello everyone, welcome back to another weekly market update. My name is Samer Raslan. I'm a senior technical analyst at the Institute, and today we have a beautiful bull markets everywhere. So kicking it off with Bitcoin, as I've always been pointing out to you guys that Bitcoin is a good buy, and as you can see, with all these geopolitical tensions and uncertainty, after the breakout of the trend line, also, we had a very strong support here at 94 and a beautiful breakout to the upside. So our entry would optimally have been at the bull flag here on a lower time frame, as you guys can see. So that would be an entry. Now, is it a good buy now? So on a lower time frame, it is forming a little bit of an ascending triangle, which can give a little bit of possibility for the price to continue to go up. However, I would not look for this as an optimal entry for from the price of 103,500 to reach the level of 108,500 resistance. So in an optimal word, if we get a confirmation on a lower time frame, we can go for a buy from this, let's say, price range. However, the target will definitely, for me, not going to be this resistance. It will be probably somewhere around here, 104.5 or 105 approximately. So if that happens in another scenario, which is in a healthier scenario, we would see this triangle to force the price to fill this fair value gap, retest the support at 100,000 and another beautiful continuation to retest the resistance at 108,000. So this is about Bitcoin. Very, let's say, friendly or eased, as in a better word. Very eased patterns are forming, and yeah, just keep an eye on it and dig into the market. So even though all these tensions that are happening between India and Pakistan currently, we can see that their actually markets are not acting that negatively with all the tensions that are going on, especially when it comes to stocks. You guys, some of you are familiar. Stocks get affected by tensions negatively usually, but when it comes to Nifty50, we have some pretty impulsive movement to the upside, which got us this break of the trend line of the ascending channel. And Nifty50 now it's finding support at 24,000. Now, we can see a strong momentum to the downside, so we might see Nifty50 liquidating this support, filling this gap at the support level, and which is 23.5, and from here we can see a continuation to another attempt to break the resistance. So yeah, if we get some impulsive movement to the upside here, like an engulfing, right, we might actually consider seeing to go long without the liquidation, but the liquidation will make the trade more safe, more understandable, more healthy. Right, so in an optimal scenario, I would want it to continue going down before an entry for a long position, and I wouldn't really want to go for a long position, even if we find some pretty like decent bull candle here, because that could also be a retest for the resistance on a lower time frame to shape that trend for us on that time frame. Okay. So that's about Nifty50. Going to US 100, and we can also see that after another break, similarly, not too similar, but a little bit similarly to Nifty50, after a break of the trend line of the previous downtrend of NASDAQ 100, we can see a retest. Market moved up. Here we had a bearish pattern, but we can clearly see that the market has broken above, and it's having some healthy movement from the candles here. So market did this flip, which is very, very beautiful and very healthy. So it followed the pattern, got the liquidity it needed, gone to the support that was resistance previously unbroken. So made that retracement, and from here we got a very impulsive movement to the upside. So we could have entered right after this small or medium-sized green body, right? Yeah, but another aggressive entry would be here, but this would be more of a safe entry according to understanding candle formation. This candle here, guys, I'm talking about. And we could go for a long position. So we saw that market moved impulsively. We got a diamond pattern here that ended up pushing the price a little bit up. So from here, we might see a little bit of continuation to the upside to retest this resistance. However, it is in the supply zone because we can clearly see that this was a support broken. So it's this zone actually, not only this tiny price. Yeah, it's as big as much. So it is at the resistance. So we can see a retracement. So we have retracements in one of two expected ways. It could go to 18,800, which is not really optimal for a movement because market took the liquidity it wanted. It is in a healthy up movement, and Donald Trump now is on the doorsteps to make deals about tariffs with Europe, and probably once they start making figuring things out with Europe, it's going to be a step forward for other countries, and who knows, they might actually finally come to a conclusion with China. And you guys can see the reflection of investors in a positive way when we see this up movements, even when these news are out, still not implemented. The news I'm talking about are the tariffs conclusions. So technically, what we're looking for actually is a retracement that could be to this support, right? So if we get to this support 19.5, then we get a good confirmation for a long entry, right? So I wouldn't be waiting for it to retrace to that price because there is a very decent possibility it will never, right? So keep an eye on that, retrace into here, and if it does retrace to here, which also aligns with a trend line that is not drawn. Okay, I'm not gonna start drawing things now. So a trend line that we're having here, right? So it goes down to it, perhaps liquidate the trend line a little bit, then continue up in a healthy uptrend to the upper side. And if it doesn't retrace as much, even it gives us that idea that there is enough liquidity and fuel and interest in markets to go long on US 100. So this will be it for the upcoming week. Pretty good opportunities, pretty good markets, guys. Keep an eye on it and we'll see where that will take us. Just for your information, I'm pretty sure you've noticed. For those who haven't, we had our terminal on TradingView as Xylostar Strategy. Now it is Xylostar Education. So make sure to give a follow there if you're looking to stay updated with analysis as soon as it gets out to public. So yeah, that will be it for this week.
Yeah, guys, let's check together the gold market and the Euro USD market. We'll start with the Euro USD market because the Euro USD has broken our channel from here. And what we are expecting a little bit retracement to our channel. Why? Because after breakouts, usually we are waiting a retracement. So yeah, in a 2 hours time frame next week, we are expecting the market to come to these zones from here because he has some liquidity in the upside, let's say sell side liquidity, and he need to fall down to continue his movement, which is the bearish trend started. Going to the gold market, guys, and the gold, let's say it's logical for gold to touch liquidity zones from here like he did last week. What he did, he was manipulating this going to our order flow, and we have a strong order flow here with some zones of liquidity. Needs the market to manipulate it before going to the upside because we are still in the uptrend. And what's going on between tension, it's going between India and Pakistan, it's reflecting to the gold market because we know that India has very nice let's say reserve for the gold. So we are waiting what's going on, guys. See you next week.
Greeting everyone, I'm Ahmedian here. I'm senior fundamental analyst at Xylostar head office in Dubai. Last week was very crucial because it was packed and booked by the different news and economic indicators. Last week we got the press conference and the rate decision by the Federal Reserve. The Federal Reserve didn't cut the rate. As mentioned in also the press conference, Jerome Powell stated that economy is still in the good shape and labor market is healthy, plus the economic growth is pretty normal. Although we had one, let's say, GDP for the first quarter, which published lower than expected, and let's say it published in the negative area. So here we have the DXY. Last week we got also different news regarding the tariffs between the US and the UK. So it led the financial market and also especially market participants to expect the DXY to consolidate here and for the long term pushing upward. And from the other hand, after the press conference of Jerome Powell, now market participants, as you can see here, are expecting the lower rate cut, lower probability for the rate cut as they were expecting last week. As you can see here, I just clicked on the 30th of July FOMC meeting. Now market participants are expecting 40% for the rate to be not changed, same to yesterday, but it's way higher than what market participants were expecting last week, which was only 20%. Why? Because Jerome Powell stated again, I'm just repeating again and again, Jerome Powell stated that economy is in a good shape and everything is stable. So stay tuned with the Xylo Star. See you next week.
Thank you guys for watching us. Don't forget to subscribe, like, and put comments.